Hey guys.
Hello.
I'm usually working off of like bullet points, so we'll just like try and wing it here. But
What are we covering today?
Gaston asked me to come talk about the pending recession and what it could potentially do to Bitcoin. So that's what we're going to talk about tonight. So first of all, I'm sure most of you guys are aware we have like danger all around us on the horizon. You were talking about waiting for the recession that never seems to be coming. What we do know is that trying to predict market cycles and tops and bottoms is impossible. It can't be done. Maybe you get one lucky. You have Noel Rubini. He's famous because he supposedly called one, but he was calling it 10 years before it actually happened. The problem is that, you know, as Warren Buffett said, markets can stay irrational a lot longer than we think they can. And so we can see what's happening, but we don't know when. And so we don't know when things will eventually break. As investors, right, there's a lot of us that are in this not for the money, maybe for the technology, and that's definitely, I'm in that bucket, but I also want to make money, and I care about it as an investor as well. So as an investor, we have to understand we have to be able to look at all the signs that we're seeing and be able to move and react to those things. So some of the things that we're seeing that you guys are probably seeing on the news or Twitter, wherever you're looking, is obviously we have like we have a trade wars, right? We have tariffs, trade wars, we have currency wars. All the currencies are now devaluing. All the governments of the world are devaluing their currencies. What does that mean? Devaluing, well, they're taking the value out of the money. That's what that means. They're taking the money out, or the value out. You had made a comment about having money that no one would use money that was losing value, but they do it every day. And you see extreme examples, Venezuela, Argentina, etc. Right? I mean, you see it happening really, really quickly. So we have all this happening, and as I kind of made a comment earlier, like almost every problem that we see in the world really comes back down to the money, and this is even like social issues. I mean, we have Antifa like rioting up in Portland, we have protests in Paris, we had 1 million people that are about to be killed and put into communism in Hong Kong or whatever's going to happen. I mean, the world is like busting at the seams. We have Argentina and Venezuela all dropping like flies. We have massive amounts of global debt that have been created where the governments of the world, over half the debt they hold is at negative interest rates. So that's over $15 trillion is literally worth less than zero. That's what that means. So what's happened is the way, you know, for 5,000 years we've had a solid money supply. I have to kind of go backwards just a little bit, and I'm sure most of you guys know this because you've all been down the rabbit hole a little bit. And if you haven't, then this will hopefully start you out. But for 5,000 years, we've had money that was based off of gold that couldn't be inflated. For the last 50 years, or really the last 100 years, we've inflated our money through debt. We've had debt expansion, and it's created so much money in the world that it has nowhere to go. There's not enough wealth, which is real assets. There's not enough labor. There's not enough places for that money to go. And so because you can't give it out and earn interest, you're basically paying people to take that money. That's what that means. And so we thought the market was going to crash for years because interest rates were so low. How much lower could they go? Well, we found out they can actually go less than zero. We didn't know that. And so now, how much lower will they go? We don't know. If you really stay tuned to the market and you listen to the forecasters, people are saying 2020. Some are saying 2020 to 2023. We have big cycles, 40-year cycles and 80-year cycles that are all converging right at this time. So we can study hundreds of years worth of cycles, and we can see it's all converging. So anyway, my point is that we have trouble all around us, and the world is teetering on the edge of falling off the cliff. And will it happen next year? Will it happen in 2 or 3 years? We don't know. But we do know that there's a strong catalyst. So not only do we have all this debt accumulation, just in the United States alone, well, really all the developed world between Europe, United States, Japan, the West, what we call it, the developed world, we have these massive aging populations, which is another massive problem. So it's a demographics problem. So we have too many old people and not enough young people. In Japan, they have more people dying than more people being born. And so what's happening is we have old people are living longer and they're very expensive. We have massive liabilities. And just in the United States alone, within the next couple of years, all the revenue that's collected in the United States, all the tax revenue, won't even be enough to pay for the old people. Think about that. Within the next couple of years, we won't even be able to pay for that. Within the next couple of years, we won't even be able to pay the interest on the debt. We won't even be able to pay for the old people. Never mind the defense. Never mind any of that, right? So like anyway, we have all these problems. Is it going to happen next year? Is it going to happen in the next 2 or 3 years? We don't know. But in addition to the whole world teetering on the edge of falling off the cliff, now we have technology, right? Now we have Bitcoin that's ready to come up and just push it right over the edge. And it's not just Bitcoin, it's digital currency. I like Bitcoin, obviously, it's decentralized. I like that. We have other ones that are more centralized. We're talking about Facebook Libra earlier. Just last week, if we couldn't get more crazy news, just last week we had all the central bankers of the world were in Wyoming at a meeting, and the head of the BOE, Mark Carney, gets up and says, we need to get rid of the US dollar. That's what he says to all the central bankers that are there. Now, we talked about some of these other countries that are quickly moving to Bitcoin or other cryptocurrencies. Portugal's accepting it. A lot of countries are accepting of that because they don't have the world's reserve currency. The US dollar used to be backed by gold in 1971. We got off the gold standard. Now it's basically been backed by oil, the petrodollar. Go back and study that if you don't understand the petrodollar. Every war that we have had has been about protecting the US dollar. So anyway, I set the stage. That's the problems that we have. So what's going to happen? All right, so I don't like to make predictions. It's kind of like what the CIA does, is we look at probabilities. Okay, if this is going to happen, then these things may happen. But if this is going to happen, then these things are going to happen. So instead of trying to make a prediction, we look at probabilities. So we have two problems. One, we have massive debt. They've inflated the money supply. But what happens is, as the debt starts going bad, it starts deflating. All right, so what happens to Bitcoin? In an inflationary environment, as they print more Bitcoin, as the markets continue to go up, Bitcoin could be worth a lot more money. In a deflationary environment where the debt goes bad and it deflates, then potentially Bitcoin could suffer in the short term. So we have kind of short term and long term. So we have to kind of look at this. I believe that in the future, Bitcoin has a really good chance of becoming this world reserve currency. But what happens in the short term? What happens in the next 3 to 5 years, right? Bitcoin is not ready to take center stage. Bitcoin is not ready to be the world reserve currency as much as we want to believe it is. I think gold would probably be the beneficiary of that first. But what happens? So we know that human greed sits in. We know the central bankers are not all of a sudden going to wake up one day and go, we should live within our means. Let's go ahead and just cut the budget, right? So they're basically, we expect that they're going to continue to print money until they can't anymore. So they'll print money until the thing breaks, which means inflation. So in an inflationary environment, we'd expect Bitcoin to do really, really well. So over the next year and a half, 2 years, we're imagining they're going to continue just to pour as much money into this machine as they possibly can until it becomes worthless. So over the next couple of years, we should see the stock markets hit all-time highs. People think it was dropping last year. I was on my YouTube channel saying the stock market is not done. We'll see 30% more this year. We're up 20% already. Gold's up 20% this year because of this as well. And so I believe that's what's going to happen. We'll see massive inflation. We'll see the stock markets hit all new times highs. I think Bitcoin could hit a new all-time high by the end of the year as long as this continues to happen. At some point it breaks. And is it a year? Is it 2 years? Is it 3 years? In a deflationary environment, just like gold takes a massive hit in a deflationary environment, and Bitcoin will probably follow suit until it recovers and then kind of becomes this world reserve currency. So what does that mean? We're kind of wishy-washy, right? We're kind of covering both fields, and that's because we're not exactly sure. I believe, like I said, my thesis is that they're going to continue to print until they can't print anymore. Stock markets hit all new time highs. Bitcoin does. Real estate, all the assets basically will continue to pump as they print money. If you don't own assets, you're going to keep getting poorer and poorer. That's what it is at the end of the day. You're going to keep going broke because your spending power goes down, your real wages are going down, and you don't own assets to keep up with inflation. So Bitcoin good, gold good, stocks good. When it breaks, could be 18 months. We know the yield curve inverted. That typically gives us about a 6 to 18 month window, or runway, I should say, before things really start going bad. So just be aware. Keep a lot of cash. I like cash flow. With some of the platforms like Celsius and whatnot, you can earn up to 10% interest on your cash. So it's a good time to hold cash and still earn interest. Real estate's sketchy. I'm not going to get into all that, but there's still cash flow opportunities there. Obviously, Bitcoin and gold are good to hedge against massive inflation. But that's my outlook. So hopefully that makes sense.
Question.
Yes.
You got questions? Because I take all the questions usually.
Yeah, I get super confused on the inflation deflation thing. Can't there be both at the same time?
No.
Well,
It's like a balloon, right? So you're either inflating a balloon or you're deflating a
are
balloon.
we talking about the money supply or the purchasing power or the value of things?
Well, we're talking about the money supply. So the money supply, when the money supply goes up, it lowers the purchasing power.
Okay. So in deflation, okay, we're in inflate, and then what happens to that money? Where does it go? How is
Well,
it going to deflate?
it disappears. So you have to. So what happens is money, real money, has to have a true cost of capital. So money, and this is where these politicians get this all wrong, and they want to do this MMT, this modern monetary theory, which means they can print endless amounts of money. Money. This is a very key point. Money is not wealth. Money doesn't create wealth. Money measures wealth. Money allows me to buy wealth. Wealth are real assets, okay? So what we have is we have a bunch of money, not wealth. If overnight everybody in the world's bank account doubled, if we all woke up tomorrow and we all had twice the amount of money in our bank account, nobody would be richer. We would all go out to buy more goods, and guess what? All those goods would go up in price. None of us would be more rich. We'd have more dollars, but what does that mean, right? So anyway, to your point, all the money that's been created has been based off of debt, not wealth, debt. And so what happens is, how does it deflate? Where does it go? It gets defaulted on. The debt doesn't get paid. So right now I have $1 trillion on my books. When that $1 trillion gets defaulted on, it goes away. Well, what am I left with? Nothing. I'm left with an empty balance sheet.
I think you missed with a few key, with MMT and just general macro fiat. Like when you print money, what MMT says, it has to be, if it's not used towards goods and services, then you have inflation. You have the devalue of the currency and of the actual GDP. Like what the, because those are two different things. You know, a unit of money and actual worth are two different things. So, but that being said, yeah, when you print money and you have this $20 trillion debt, but that's not really getting put towards goods and services. Like, it's not getting put towards the people, it's getting put towards stock buybacks, things that it just props up value. Then you're gonna have, just like you said, it's gonna increase these runaway,
Well, it's not, right? So the money hasn't gone down to goods and services, which is why they say we don't see a lot of inflation every day, but we see massive inflation in New York real estate or in the stock market, et cetera.
Yeah, where you go buy a steak at Whole Foods, it's $35 a pound for a ribeye. I mean, that's where inflation goes.
So on the negative interest, I heard this theory, I don't know, I'd like to see what you think about it. So the theory is that, especially in Europe, is that they have negative interest rate because they want to stimulate the economy and tell people don't put the money to the bank, go and invest.
Right.
And that's so that, I don't know if that makes sense.
Well, that's exactly what they're doing. Right.
But it's not that bad.
Well, it is bad because they don't understand the theory of money, right? So money needs to be saved, and then it needs to be deployed as capital, right? So it's a difference in thinking. So they want you to keep spending so they can keep printing more money, but really we need to be saving and deploying capital, right? So in Europe, they're starting to see a lot more negative interest rates than we are, but it's typically, it's right now, it's still kind of the governments, the central banks that are the ones that are paying it. Not so much like the individuals yet, but it's coming. I think, it also shows like the risk that's out there, right? Like, I would rather give you my $100 billion and know that I'm going to get back only $95 billion, because the risk of me keeping it is worse. I could lose 30%. If I hold it, I could lose 30%, but if I give it to you, I'm going to lose 5. I'll take the 5.
But he's taking the risk that you're going to default.
And I'm taking the risk that you're going to default.
And that's where he's really saying we're fucked about. That's how the money goes away. Yeah.
So a very likely scenario is that, who do we owe the money to? We owe it to ourselves. So why do we need to pay it back? Why don't we just write it off?
Right.
So that's the likely scenario. All the governments, China, you think we're bad. China's teetering on the brink of disaster. They have $49 trillion of debt. $49 trillion. You think we're bad at 22, 23, whatever. So all the countries are in the same boat. So what do? So hey, well, just delete, right? But what happens? Well, destroys the currency. So now the currency is ruined overnight. And so that's why I'm saying we have these events, like the whole world is teetering on the edge, and now we have Libra or Bitcoin or whatever new Fed coin or whatever that's just ready to just push someone right over the edge. And so we have these black swan events or whatever.
If the top 5% richest people on the planet just all vanished and their wealth vanished, what do you think would happen?
Nothing. It's a drop in the bucket. We're talking whatever, a few $100 billion.
No, the top 5% wealthiest, you know, like.
I mean, if you're talking like
population, because I mean they own the majority. I mean they hoard pretty much.
Well, technically, you said top 5% families, not top 5%.
I'm sorry, my bad.
Population.
Yeah, population, but I mean like you know, the whole planet Earth, and we have all this debt, we have all these assets and cash out there. If they were just to cease existing, what would happen to?
Well, if they ceased existing, but somehow all their wealth got taken with them?
Yeah, if their wealth just vanished.
I don't know. That's a big hypothetical. I mean,
well, ultimately, that's what taxation and printing money does, right? Like, because taxation just destroys the money, and like, you know.
Well, taxation doesn't destroy the money. Taxation reappropriates the money, right? So the government cannot give something it has not taken. So when it gives, it takes from you to give to somebody else. Somebody's welfare, someone in California is cashing 35 grand a year of welfare that's coming out of your paycheck.
No, that's one way, that's a perspective, but I think there's flaws in that, because ultimately, like economies and populations grow, right? So we have, let's say we have, just with general terms, like we have a brand new economy, we have 100 people in it, and we have $100 for those people, and they generate goods and services, and they all have kids. If we kept that supply at 100, we're gonna have to divvy that sucker up to like, okay, now.
Yeah, so you know what happens?
25.
It's called. What happens is deflation,
Right,
and deflation is good. See, what's happened is the financial system has captured the school system and taught everybody Keynesian economics or modern economics, whatever you want to call it, which they believe we need to have an expansive monetary system to take care of all the people that are being born, because they think that deflation is bad. And the reason why they want us to believe that deflation is bad is because deflation, if you're living on your savings, deflation is very good. If you have massive debts, deflation is very, very bad. So the government wants to maintain a minimum of 2% inflation so they can inflate their debts away. Deflation is good. That means your money that you have today will buy more tomorrow, not less. And so I see what you're saying, right? You have more kids and now you have to divvy up the $100, but everyone's spending power goes further.
Well, ultimately, it's a function of, like, to me, it doesn't matter, like, if an apple is worth $1 or it's worth a penny. Ultimately, like how much of my day or labor goes to like acquiring that.
Exactly. So then you have to get off the money standard and look at like, okay, the average 8 hours in 1950 afford, and what does the average 8 hours today afford, right? So you can look at it from time, energy, oil, whatever you want to look at. But
which is good, because this whole conversation leads to, okay, because who controls that deflationary, inflationary? Who controls those levers? And it's usually people.
The central bank.
The central banks, right?
Bank.
Who controls central banks? Usually corrupt people that
a handful of people.
Right. It's usually people none of us like.
We call it the trusted third party.
Did you have something?
Yeah, exactly. There you go. Trusted.
We gotta wrap up this video, guys.
But
We're going to.
Why would
Don't
you
take off the mic yet.
Good.
All right, everybody, give it up for Mark Moss.